Howdy, everybody. Welcome to Liberty Call for Monday, June 16th, 2025. Hope you're having a fantastical day out there in the interwebs. It's a pretty nice day here in Colorado. A little warm. We had a warm front come through while I was out of town over the weekend, and it's toasty. When I landed in Denver yesterday afternoon, it was 98 degrees out the airport. Good thing it's 20 degrees cooler up where I live, so still was warm in the house because we don't have AC, but had a good weekend. Sorry, no show on Friday. I was out of town. I was traveling during the day, and spent a good weekend with my buddy from the Navy over in the St. Louis area, in Missouri. He lives way out in the country, which I like. It's awesome. He's got a great place. So thank you again, Mark. I appreciate your hospitality, you and the family. And anyways, all right. Well, getting to the stories of the day. Markets roared out the gate this week with the Dow surging over 400 points as oil prices tumbled. Reports that Iran is seeking talks to de-escalate tensions with Israel help cool energy markets and boost risk appetite. U.S. steel popped after regulators cleared the Nippon Steel takeover, and investors now turn their focus to the Fed's midweek meeting for clues on interest rate policy. So before we break all the news down, I need some help from you. Good. Give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All right. Well, let's hop into today's markets. There we are. All right. Dow Jones was up 0.75%, 317 points, closed at 42,515. S&P 500 up 0.95%, 56 points, closed at 60,33. NASDAQ up 1.52%, 294 points, closed at 19,701. The VIX was down 8.3% today. It's at 1911. Canada up 0.24, Brazil up 1.65, and Mexico down 0.73. Headed to Europe, Germany up 0.75%, the UK up 0.28, France also up 0.75%, Netherlands up 0.25%, Spain up 1.44, Italy up 1.24, Switzerland down 0.27, and Portugal up 0.94. Russian exchanges split today. MOEX down 0.47, RTSI up 0.15. And the overnight markets, the Nikkei in Japan was up 1.26%, Australia up 0.01, New Zealand up 0.8. In China, the Shanghai up 0.35, Shenzhen component up 0.41, China A50 up 0.23, DJ Shanghai up 0.36, Hang Seng up 0.7, and the Taiwan weighted when it closed Friday was down 0.96. All right. Good stuff. Awesome. Let's jump over to the weekly economic update and see what's going on there. Stocks fell last week as an up and down mix of trade progress and anxiety, economic news, and geopolitical tensions netted out. The S&P 500 slid 0.39%, while the NASDAQ slipped 0.63%. The Dow declined 1.32%, and overseas markets edged down 0.18%. Geopolitics dominate sessions. Stocks largely languished in the first half of the week as investors awaited news from the U.S.-China trade talks and key inflation reports. Sentiment began to rise late Tuesday afternoon following upbeat comments about trade talks. Most of the market gains came before the U.S. and China separately announced the trade update, with little reaction when the markets opened the next day. Stocks peaked midweek, then declined despite a May report showing consumer inflation rose less than expected. Markets then trended a bit higher after a better than expected wholesale inflation report. Beginning Friday morning, all three averages were under pressure all day following news of an escalated conflict in the Middle East. Oil prices pushed higher on Friday on supply concerns. Brighter news. As the week ended with rising tensions in the Middle East, it was easy to overlook some of the good economic news. First is inflation. Both the Consumer Price Index, CPI, and the Producer Price Index, PPI, showed signs of cooling or holding steady, and both CPI and PPI slightly beat expectations. Second, consumers. Consumer sentiment jumped in May, the first such rise in 6 months. Economists took note as consumer spending drives 2/3 of the economy. And if I could pause here, going through reports with clients this week, the consumer spending is still going this way on the chart. So it has not started to flatten or tip over. So I know there was a month of so back that it looked like it was flat for a month, but again, it's still going in the direction it's supposed to. All righty. Key economic data this week. Tuesday, we have retail sales, industrial production, capacity utilization, and business inventories. Also, home builder confidence index and the FOMC meeting day one. That's tomorrow. Wednesday, housing starts, building permits, jobless claims, Federal Open Market Committee Day 2, and Fed Chair Powell press conference. Friday is the leading economic indicators. And no major companies reporting earnings this week, so we can skip that section. All right, good stuff. Let's jump into the market recap. SP 500 rallies as Iran reportedly seeking ceasefire and nuclear talks. The SP 500 rally on Monday as easing geopolitical tensions and anticipation of key Federal Reserve decisions boosted investor sentiment. Markets responded positively to reports that Iran is seeking a ceasefire with Israel and is calling on President Trump to broker peace through intermediaries such as Qatar, Saudi Arabia, and Oman. Iranian Foreign Minister Abbas Araki stated that if Trump is truly interested in diplomacy, the next steps would be significant. These developments sent oil prices lower and sparked a broader risk-on rally. Attention now turns to the Federal Reserve's two-day policy meeting beginning Tuesday. While rates are expected to remain steady at 4.5%, markets are closely watching for any shift in the Fed's tone regarding future rate cuts. Recent soft inflation data and signs of economic cooling, including a weakening labor market, have increased expectations for monetary easing later this year. Although the Fed cut rates by 1% in 2024, its 2025 outlook has been cautious, largely due to uncertainty surrounding Trump's trade tariffs and their inflationary effects. Well, I would say because the economy has not faltered, they haven't had a reason to lower rates. Is usually what that's the first thing they reach for in their tool belt is drop rates, quantitative easing, things like that. So also in focus is the G7 summit in Canada, where tensions may rise due to Trump's tariffs on imports from U.S. allies. Canadian Prime Minister Mark Carney emphasized that the summit aims to promote peace and security, but hinted at potential retaliation if tariffs on steel and aluminum are not lifted. In corporate news, Roku stock jumped after announcing an exclusive advertising partnership with Amazon, forming the largest authenticated connected TV footprint in the U.S. Meanwhile, U.S. steel surged following Trump's approval of the partnership with Japan's Nippon Steel. On the downside, Sarepta Therapeutics shares tumbles after revealing a second patient death linked to its gene therapy for muscular dystrophy. Investors are also awaiting U.S. manufacturing data for further economic clues. All right, so that is that. And let's get to our last article, and then we're done for the day. Moving quick. All right, this is the Monday Morning Outlook from First Trust and Mr. Brian Westbury. This week's article is titled Dueling Economies. So let's get my summary here, and we'll jam through this, and we'll be done. The United States and China represent economic opposites. The U.S. consumes more than it produces, while China produces more than it consumes. Treasury Secretary Scott Bessent recently suggested that China has a, quote, singular opportunity, end quote, to stabilize its economy by encouraging domestic consumption. However, the U.S. also faces a similar opportunity to shift from excessive consumption to greater production. This imbalance isn't solely China's fault. Since 2008, U.S. real consumer goods spending has surged 62%, while value-added manufacturing has only grown by 14%. This lopsided growth stems from long-standing Keynesian economic policies emphasizing government spending, wealth redistribution, and high consumption, as opposed to just letting people do what they want with their money in the economy. These policies may elevate consumer activity, but do little to enhance actual productive output. As a result, America's economy has become increasingly reliant on imports to satisfy its consumption, while domestic production lags behind. Tariffs, often blamed on unfair Chinese trade practices, are ultimately just a symptom-level fix. The real root problem lies in U.S. economic policy. Overregulation, excessive taxation, and runaway government spending discourage domestic production. Tariffs may temporarily reduce imports, but without deeper reforms, the underlying issues remain untouched. The article draws a parallel with public health. Treating obesity and diabetes with medication instead of fixing the broken food system mirrors how the U.S. uses tariffs to treat consumption-driven trade deficit without addressing the structural causes. While China does engage in unfair practices like IP theft and labor exploitation, blaming them entirely for America's economic imbalance misses the point. Lasting improvement requires the U.S. to realign incentives, reward production, reduce regulation, and cut government excess. It's time to stop blaming others and fix our own economic foundation. I wholeheartedly agree, Mr. Westbury. Now, what are the odds that the retards in Washington are going to do any of those things? Zero. Yeah, because all they care about is laundering money back out to themselves and their friends and robbing the public blind. Again, until there's enough people on the left and right mad enough to take action, whatever that might be, a tax revolt or worse. I'll leave it at that. Until that time, we're just going to continue to be robbed, and those in Washington will continue to take advantage of us. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, where do you want to go? Doodle-doo-doo-doo. DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be glad to help. Okay. Well, that is everything that I had to cover for today. So I hope everyone has a wonderful afternoon. I'm going to go out and do some ball time before I have some meetings later this evening. And I hope everyone has a great day. Adios.